Great afternoon, everyone. Today, I'm a little sad. I'm a little excited. Today is the grand finale, chapter number 20. This is the end of the show. So, what's going to happen from now on? I don't know, but I need to know what you guys are feeling like. If you guys would like for the show to go on. So far, we have achieved the goal. This is going to be, I believe, what it takes to become a trader. Every single, or not every single, but most of the most popular indicators. We have learned 20 chapters, more than 20 indicators. We have created our own setup. We have learned a lot, and we have, best of all, I think, going into trade setups and see the results of our work and our learning, right? At this point, just maybe by practicing a little bit here, managing your emotions and keeping a cold heart and a cold brain, staying with what we have learned, you should be a successful and profitable trader. There's one more bonus chart that I'm gonna be doing. So, sorry, one more bonus chapter that I'm gonna be doing, which is gonna be tomorrow. Tomorrow is gonna be talking about the difference between profitability, right, and win rate. So basically, they're not the same. You could have a very high win rate but still not be profitable, or going for the actual amount of money while having a very low win rate, right? So I want to talk about that just to settle the questions about, or the hype when everybody's just kind of like, hey, look at that, I'm a like 100% what, or 90% what profitable trader, right, and so on and so forth. Yeah, but what kind of profitability you get, right? Nonetheless, today, guys, thank you so much for joining. I know I'm not that hype. I mean, or not that I don't know, pumpy. But this is because I have mixed feelings. I'm a little bit sad, but also excited to see what you guys want me to do. And I will need your help on the Piper Academy. If you want this show to continue, let me know. We can go into specialty trading. In this case, we can maybe go for any of the branches. In fact, this course is designed to branch out for you to specialize on a way of trading or any special tools trading style. So we can branch out on getting an expertise on support and resistance and trend lines, expertise on volume, expertise on Fibonacci, expertise on oscillators, expertise on you name it. Every single channel has its possible branch out for expertise. I love OC style of teaching. Thank you so much. Trade Intuition, my friend. Thank you, my friend. Love it. He's the best. Thank you, my friend. All right, so far, yes, I'm a nerd. I love it. So let me get started with you guys, because you guys have made this possible. I really cherish you guys. I love every one and single one of you guys that lining here. Thank you so much from the bottom of my heart. Let me name you as you guys jumped in here. We have Jesse Glue. What's up, bro? Welcome. Thank you so much for stopping by. We have Jay Violet. Thank you, Jay Violet, for stopping by. Who else we got in here? We have KDGT. What's up, my friend? How is it going? Trade Intuition Joe. What's up, my friend? Thank you for stopping by. Thank you for giving me a little bit of your time. Of course, we have Frank the Tank. And dude, that smoothie looks fantastical. I don't know if that sounds weird. I think so. But dude, that's strawberries, apples. What else I saw there? I need to try that, man. I need to try that. I'm absolutely going for that one. So Frank the Tank in the house. Of course, I think we're gonna be having username go jumping at the end or in the middle of the show. Of course, I think we're gonna have the queen mode also jumping in. Nonetheless, grand finale. Let's have some fun. And at the end of the show, stay for a couple of seconds, a couple of minutes. I'll show you what I need you guys to do. If you want this show to continue, I just need basically to tell me what kind of content you want. If you rather see the show to continue or me migrating back with Piper, and if this show standalone want you guys to continue, what kind of show? What else do you want to see? Trade setups, live trading, news and new coins, coin hunting, I don't know, nerding into different indicators that we can find out there. I mean, we can just, heck, go and find any new indicator that comes out and just piece it apart to see how it works and maybe how can we use it. I don't know, guys, you name it. You already know my style. You know what I'm good at. You know what I'm bad at, right? And you know what I'm working at. So it's on your hands. At the end of the show, go to Piper Academy and let me know on the Discord what direction should we be taking. Other than that, guys, let's go to the charts. All right, so we're on the charts right now. I see I have no video. All right, we might have a little bit of a choppy stream. We are also back on a storm, electrical storm, just like yesterday. It seems like this is gonna be every day for 4 days or 5 days. Nonetheless, I did got an extra battery for my setup, so I don't need to worry about running out of juice. So the show must go on. Nonetheless, fiber optics, that's the only thing that we are, let's just say, not cool with. Why? Because that depends on the ISP, right? The internet provider speed. All right, so other than that, I'm gonna build an indicator. I don't know, man. I don't know about building indicators. I mean, I just have the basics of PineScript. I'm not a PineScripter. I can read PineScript and based on the equations, well, understand the mathematics behind it or the logic behind it and just piece it out in a perspective way, if that makes sense, right? But creating indicators, I don't know, maybe I can invite a developer, and I don't say that we're gonna create indicators in here, but maybe he can help us piece out a couple of stuff. I don't know, the sky's the limit, guys. So let's go and take a look at what's going on here. So of course that we cannot go without our spaghetti, right? Or our spaghetti. Nonetheless, we are going for that retracement. In fact, that's what we were expecting, right? That retracement, well, was a little bit higher here. That's fine. We're going for that retracement. It's not about the breakout. It's about the retest. And off we go. Where to? Somewhere around 1012 because we had the previous highs, right? In 109 because also we have an order block somewhere around here. There we go. Here is our chunk of resistance, right? So far, we are trying to get in here, although this is not just a straight line, right? Again, we're not expecting this. We are expecting, well, choppy, slow growth. In the meantime, the main world kind of like I choose a direction. Are we going up or down, right? So we are kind of like on their hand at this point. We'll be fine. We'll be fine, Piper Academy. What am I missing? Let me see. Jesse, maybe build an indicator. We'll be fine. Could be. We'll see about that. Again, I'm not an expert in PineScript, but maybe we can do a kind of like a indicator matching, just like we did our linear regression oscillator combo, right? And how we did our SMA combo. We maybe can go for creating our own indicators, right? Just bear in mind that this comes from experience, from years of trading and playing around with stuff. So it's not like we are going to be making, like, for example, a momentum indicator, and then we just grab this, and that, and we have an amazing indicator, right? It has some working curve or learning curve to it, if that makes sense. Nonetheless, let's continue here. So we are on our way up. We already have peak performance here, going back down. Remember that I'm expecting something like that, like a double peak performance. Maybe not like exactly like this, but I would consider having a new high in here, a new heel, or even a very tiny small, I don't know, valley like in here, and then going for the next heel, maybe making a lower heel in here, something like this, all right? And the price action keep pumping upwards. This is gonna make a disparity or a difference where the price is heading to, so to the upside, and where the volume is heading to the downside, right? All right? And that it creates the introduction for what we're gonna be looking at that disparity, that contradiction creates a divergence. All right, so let's get started with a clean chart here. Let's go down and let's do another Bitcoin chart just so we can start going for, I don't know, a cleaner setup. Let's see what I got in here. All right, seems like not much, just a bunch of lines and of course a VPVR. That shouldn't be that bad. All right, and I think that it's gonna be it. At this point, I'm gonna turn everything off. All right, I don't want to create confusion. I don't want to create bias. I want just to show you the explanation behind it. All right, so let's get started with something that we learned yesterday. And yesterday, well, I think if you didn't know the plan, might be confusing, because at the end of the show, basically at the very end chapter or the previous end of the chapter, we looked at the RSI, right after we learned about our prime oscillator and our linear regression oscillator, which I have mentioned. For me, or for my perspective, they are a much better, much refined, much powerful indicator. Nonetheless, looking at RSI and MACD, it is a classical way to read the charts, right? So why did we see them at the end? This is because most of the traders, this is the first thing that they use or the first thing that they jump into, becoming one of the most used indicators, all right? What happens then when you have something about most used indicators? You can relate to it faster, better, and it's just a classic, right? Just like a Mustang, a classical Mustang doesn't run as a new Mustang, right? We're not talking about speed, we're talking about style, right? And kind of like this style goes for and has become a classical style. All right, so hey, username, welcome to the grand finale. I call out that you were going to be joining a little late, so gotcha. Thank you, my friend, for jumping in. Thank you, my wife. She brought me the goat, there we go, coffee mug. Beautiful coffee. All right, so what else are we having here? And for some reason, I don't have playback. Let's see if I can fix it, and I think so. Yep, I think we are up and running. And all right, so what's happening here? We're gonna be looking at the RSI. The RSI, what I want to do is just turn off for a little second. Let's see if I can do so. Style the RSI MA. Perfect. So we just have the RSI right here. And we're gonna be explaining a couple of stuff, all right? Right before we jump into the RSI, let's explain what is a divergence. Divergence, it's a little bit on a, I don't know, gray zone of explaining, if that makes sense, because you have X number of divergences. So let's get started to the most basic setup, right, or description. A divergence, it's when the price action is going one way and your oscillator is going the other way, all right? So why is it that your oscillator that usually measures volume, some sort of volume or some sort of momentum, and what do I say some sort? Because you can have volume times whatever, volumes minus this, right? This kind of bullish volume minus bearish volume or whatever, you get the idea, right? Any kind of volume measurement or any kind of momentum measurement, usually it's plotted into a oscillator. That is the way to go, because that becomes a directional indicator that pushes you to understand whether if we can still have that energy to keep pushing up or we're losing that energy not to keep pushing upwards, all right? So let's just say that this is our oscillator, right? And this is our price action. There we go. So when we see, for example, price action keep coming upwards or to the upside, and then we see the divergence, when we see the oscillator going downwards, well then, which is leading the way should be the volume, right? What happens here? Well, I don't want to go out and tell you straight away this is manipulation, because it is not always the case, but usually this comes for a sort of manipulation. For example, let's think about this for a second, right? And I know YouTube, this is we're explaining stuff, right? So remember, I'm not saying that the markets are manipulated, wink, wink, right? They're not, wink, wink. But you know how that goes, YouTube. We need to explain all of the possibilities. So, all right, guys, talking about quotations manipulation in the market. What happens if you owe, or if you're the owner of a news channel, right? Maybe you are the owner, maybe you are the president of the United States, and maybe you are partially own SiriusXM. Maybe you also partially own, I believe, and please let me know if that is the case or not. Remember, this is all hypothetical, right? Hypothetical. Maybe you also own Fox News, or maybe you also own, I don't know, CNBC or something like that, right? You own a couple of things that they push to one side. So you go ahead and you say, you know what? It's time for me to buy a new yacht. All right, well, I have that. I need money to buy that new yacht, and I don't have the cash, because that kind of people doesn't usually have that on running cash. It is an investment. What do? You get a little bit of you cash out one of those investments, and then you invest on something else. Let's just say that right now, what is trending, you ask your news channel, hey guys, what is it trending? Well, crypto is trending, they tell you, and you go, all right, perfect. Let's buy some crypto. Which coins are trending? This and this and that. All right, let's buy this and this and that, right? It's not like your son is creating or making a new exchange. Is it? Right? I mean, I don't know, you get the point. And yeah, I think you got the point, bro. Jesse, I should be, of course, wearing my special hat in here, right? Because everything that I said with this hat, for some reason, YouTube ignores it. So this is kind of like my shield. I think it does help against a 4G, 5G, or YouTube G, whatever, right? Nonetheless, let's just take this out of the way because it's hot here. Nonetheless, you go and buy whatever assets are trending, right? And then you go, or you wait for a little bit of a retracement, and then you buy, and then you go, all right, guys, it's time for the news channel to talk about why is crypto important. You're not lying. You're just describing what crypto is important. So what happens, in true story right here, 2 days ago, my neighbor, she's an elderly person, like elderly, like she can barely walk. She caught me out there, right? And she go, hey, OC. And I was, hey, yeah, what's up? What can I help you with? I've heard about bit something cash. And I like, Bitcoin? Yeah, that thing, right? And I'm trying to translate from Spanish to English, right? And she goes like, you do that, right? And I go, yeah, that's what I live right now from, right? That's my main business. All right, so is that a scam? How much can I put in if I want to get out like 3 times my cash? And I'm like, all right. When your grandmother, when your auntie, right? When the older elderly neighbor goes and start asking about Bitcoin or altcoins, I think we should be getting a little bit worried about it, right? Because why? Because they're watching stuff on the news, right? What's happening when the news are pushing it? Well, maybe they want to push that sentiment and get people to invest. So when it goes up, the guy that needs his new yacht can sell for cash, get his new yacht, and what happens sometimes, most of the cases, creates a snowball effect to the downside, right? So things is like magnet. What's going on with magnets? Bingo bango, nice. All right, magnet chat. Not sure that I'm in with the joke, but all right. I'll think I'll read it afterwards. So the point is that you created, or someone created, a manipulation, because at the end of it all, you wanted to get a benefit out of the market without actually telling people to buy, right? So also, maybe you can drop down an article saying that Bitcoin, and this is truth, it's been the most revenue or the most profitable asset to invest throughout 2025 and 2024 and 2025, right? So you're not lying, right? So what could your predictions be if you buy now and we get the same growth that last year? Of course, that an analyst is going to tell you, hey, hold on your horses. the more into the cycle you buy, the greater the chance you are buying the top. So you should not be buying all in. Even if last year that we were starting the cycle, right, we knew we could get those kind of gains. Right now, this could be the last power that we have, the last little pump. And if you are planning to hold it for one more year, you might be holding it to the middle, into the middle of the bear market. But they don't tell you that, right? So is that manipulation? Yes or no? Like, true story, what happened with the president of the States when they talk about the BTC reserve? What happened back in the States, right? Do you remember? There were a couple of things happening right there, right? And I'm just stating facts, YouTube, right? So, well, it happens that they got a benefit out of the announcement of a crypto reserve. So is that price manipulation? Is it? Well, then what happens? While the rest of us are seeing that the volume is decreasing, right? Well, the immediate masses buy fast, but buy fast constantly in small proportions, while all of us keeping or not selling, right? Our price so far, so that's why the price goes up and the volume is kept either flat or with some big chunks as we see that the volatility is going up, because we know we are in topping zones, we're taking some profits, right? Therefore, we see the price action going higher while the volume going lower. So measuring how much of that disparity the market will find equilibrium. Let me clear this up. So once again, going back, price action going up, your volume or your oscillator going down. If you can measure this, right? Well, then the amount or the distance between or the difference between the volume, right? And, oh, the other way around, there it is, like this. And the drop, right, of the price action, that difference will give you a bigger or smaller price correction to fit your volume. All right, at the end of it all, what we should be looking at is the volume and taking leverage, not leverage of money. Saying, all right, are we still going higher? Maybe I can put a high leverage. Now we're talking about money, right? Small position just to profit from here to there, right? High risk entry, not financial advice. So that's what we do, but we know we're preparing for that short, right? So, all right, now that we understand what are divergences, usually they are based on manipulation or disparity between the price action and the volume caused by usually market manipulation or normal market shifting, right? Well, then we can take advantage of that. How do we measure divergences and how do we look for those? Well, we have bullish, bearish, and hidden divergences. We're going to be looking into hidden divergences tomorrow with the extra topic, which is going to be profitability, right? That will be chapter 20.1 and 20.2. But in the meantime, let's just look for the strongest, on my perspective, the strongest resulting divergences, which are bullish and bearish, all right? Now that we know how to measure them or what they are, let's bring one of our oscillators in here that already calculates divergences. Let's make our life much easier. For that, let's go to daily. We have more chunky candles and we have many more divergences. In here, you'll see a lot of lines. Those lines are divergences. Let me first double click on one of those. Let me go to inputs and you'll see right here, this is how Chartbrand has classified them. Green for bullish normal divergence. This is one of the ones that we're going to be looking for, right? Red, which I hate that red. I don't know why they choose that, but I love this one, right? This is a normal bearish divergence, right? This is, again, one of those that we're going to be looking into. Then yellow for bullish hidden divergence. We're not going to be looking into this. I'm turning down the opacity. And then want you guys to notice that as I turn on the opacity, look at that, it appears. And as I turn down the opacity, it disappears. Orange for bearish hidden divergences. Again, hidden divergences tomorrow, topic for tomorrow. And finally, blue divergences. What are blue divergences? They are multiple divergences. Let me turn down the coloring here, and you'll see that some blue lines disappear in here. So what is a multiple divergence? It is, for example, a triple divergence, a quadruple divergence, a quintuple divergence, so on and so forth. Couple of things that we need to understand about multiple divergence. They're sometimes a little bit deceiving. Why? Because of the count on how you call them, right? A divergence, usually the first divergence or the simplest form of a divergence happens between 1 and 2 points on your oscillator, right? So 2 peaks of your oscillator give you a divergence, all right? So for example, look at this itty bitty one. 2 peaks give you a divergence, right? 1, 2 peaks give you a divergence, right? 1 and 2 peaks give you a divergence. We'll explain this in a second, but hold on your horses there, right? So 2 points, 2 peaks creates one single divergence, all right? Then what happens when you have more than one peak? For example, right here, 1, 2, and 3, right? So I have one divergence, and then is this a second one? Is this a double divergence? Not really. We actually skip the double divergence. We go into the triple divergence. Why? Because for some weird reason, don't ask me why, I did not investigate on this, and I skipped that chapter, just so you know. While reading about divergences and learning about divergences, I need to be clear and to be honest. So I skipped that chapter. Well, we count how many peaks, right? 2 peaks, single divergence. 3 peaks, triple divergence. 4 peaks, quadruple divergence, so on and so forth, all right? So Mark Dodge, what's up, my friend? Welcome to the grand finale. Welcome, my friend. All right, now that we know about that, how do we measure divergences? So how we read those divergences? Well, remember, as price goes up, right? There we go. And what is this? Our oscillator goes down, all right? Since when does that start happening? Look at that. Right here, we have one peak. Well, then where did we have the next peak? Right here. What happened between these 2 peaks? We went down on our oscillator. So let me just remove this. So let's do a horizontal, and if I zoom that enough, you see that this peak, it's lower than this peak, all right? So the price action should also be lower between those 2 points, should also be going low, right? What happened between this point and this point? The actual thing went up. One important thing in here, it is that when we are measuring divergences, top, top, bottom, bottom. What does that mean? If I'm measuring a divergence at the top, I'm measuring the movement of my price action at the top, all right? Because sometimes you're gonna have something like, for example, like this one in here. Let's just imagine that we have a little bit higher here. So from the bottom, in here, for example, top, I should be measuring top, right? Not top, bottom. Because at this point, well, what happened with this? What happened with that? So was that flat? What if I counted from here? This was actually going down, down. You see that? In fact, depending on how we're looking at it, if we had this peak higher, we could have from top to top with a low, from bottom top to top with a lower increase. So right here, if we should have just a slightly bigger price action in here, this would have been another divergence. Does that make sense? All right, so top, top, bottom, bottom. Again, bearish divergences. Let's start drawing stuff in here. We have bullish. Let's go for this. Bullish, right? We have bearish divergences, right? Price action There's gonna be PA, or you know what? Let's do it like that. PA, price action, versus, man, I don't know what is it, cricket, versus oscillator, right? So a bullish divergence, what does that mean? That means that the price is going low, and we want the result to, or we're expecting the result to be to the upside. That's why it's a bullish divergence, because the result should be bullish, all right? And the oscillator, what is going on in here? If we're measuring, if we're going down in price action, what my oscillator should be doing? Going up in volume or momentum, all right? So let me just make this, there we go, perfect. So something important about your bullish divergences, all bullish divergence, they get measured at the bottom. Do you see that? All bullish divergence, they get measured at the bottom. So let's go and actually change the colors of this. So we know this is bullish, and we should be searching for bottom planning, right? Now that we understand that, let's go for that. All right, so a bullish divergence, it's found on a bearish trend, right? So for example, let's go here. We are now on a bearish trend, right? How do we measure the divergence? We measure it from the bottom, all right? We go for bottoms like that. And what else should we measure it from? Well, if we're going downwards and the volume, the peaks are going higher. You see that? There we go. So from this peak right here to this other peak right down there, we created a higher bottom, all right? Higher bottom and lower bottom. This is a bullish divergence. So something important to note, and this is starting to understand how we trade with this, all right? Just giving you the advance right now, is that we create our trend line as always, when we always start with trend lines, right? And then, let me see, come on, where do I find the thickness of this? There is it, style, and here it is, perfect. We wait, we see bullish divergence, perfect. Breakout retest, that doesn't mean that we're gonna be making a higher low, right? But if we make a lower low and a higher, in fact, we should be having a divergence in here. Why we don't have a divergence? Because we have a maximum factor in here. If we increase this, we could be finding bigger divergences, larger divergences, right? So when we have a divergence at the bottoming factor here in breakout, we know it's going to be an explosive, or we expect to be an explosive reaction, right? You see how that's playing out? Let's go in and remember, let's go for bearish divergences. Bearish divergence, opposite of bullish, which means price action should be going what? Let me read you guys on the chat. Let me just wait a little bit of a couple of seconds so you guys tell me, because we have a little bit of a delay in here. So let me read you guys what should be happening on a bearish divergence. So the price should be going down, or should the price be going up for us to find a bearish divergence? Remember, bearish is for the result in the price action. So what should we be expecting to see on the price action here? Let me know. Ooh, what a coffee. All right, reading you guys, go for it, go for it. Let me know. The point here is participate. Let me know. So there it is. Going what? Going up, of course, right? So there we go. We should be having, and let's go for a white stuffing here. There we go. We should be seeing a movement to the upside, Exactly. There you go. Trade tuition. You're cheating, bro. You're an expert of this, bro. Love it. Love it. No, don't worry. That's the intent that you guys participate. Thank you so much. Trade tuition for participating. Love it, my friend. Love it. Love it. Looking it to come down. Exactly. Looking for it, for the result to come down. Exactly, right? And what should we be expecting on our oscillator? The opposite, right? If this is going up, we should be looking our oscillator, right? Going downwards, right? So how do we measure stuff in here? Exactly the opposite. Remember, bottom, bottom, tops, tops. When we are going up, we measure tops, right? In the price action. So right here, we should be going for there we go. We're measuring at the top. And remember, tops, right? So we should also be measuring at the top. When we're measuring bullish, right? Bullish bottoms, bearish tops, right? So just go with the trend. The trend is your friend. That is basically it, right? I think that would be my best advice. If the trend is up, measure tops, right? If the trend is down, measure bottoms to get the opposite result, right? So if the trend is going down, you're looking for a bullish divergence to break up result to the upside. If you are looking for if the price action is going upwards, so if the price action is bullish, you're looking for a reversal. You're looking for the tops, right? For them to create a bearish divergence and break back down. Hopefully that is clear, right? So once again, tops bearish, bottom bullish. All right, so that's how you measure. And now let's go and try to measure bearish divergences. All right, so let's hide our oscillator for now, right? And just remember, it is mandatory to have an oscillator, any oscillator out there, right? It doesn't need to be one or two. I mean, it can be any oscillator that measures any sort of momentum or any sort of volume. All right, so now that we know that, let's go and see areas where we could find bearish divergences. So remember, the trend needs to be up, right? So for example, right here, uptrend, right? Uptrend, we could find maybe a bearish divergence. Right here, not much. Well, inner structure could be like right here, right? Maybe an itty bitty tiny divergence in here, right? Maybe right here we could find a divergence going up, right? Where else could we be maybe looking for bearish divergences? Right here we could be looking for bearish divergences, right? But how do we confirm them? Again, we need a comparison point, which is in this point we're just using our, let's go for this. There we go, our oscillator, which is momentum. So we're going for momentum divergences, all right? Look at that. So as the price goes up, the volume or momentum goes down. Remember, tops bearish. Add a triple divergence. Remember, triple because there's more than two, right? Again, sorry, more than one. Don't ask me why. More than one triple divergence, all right? So this is a triple divergence, so a dual divergence, not really. Those are two different divergences measuring two different parts of the charts, right? Remember, let me double click in here. We have a minimum and a maximum. So maximum is not just going to measure anything that is exactly 35 points apart. No, it's going to measure anything that is 35, 34, 33, 32, 31, 30, right? Whatever. All the way from 2. So 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, right? Till 35. Anything that has 35 ticks of distance will trigger a different divergence. So maybe this is, and let's measure, let's see if we can measure this. Maybe this is right here, it is a 31 bar divergence, right? But remember, we're measuring till 35, and what we have in here, a 35 divergence. So those are just different divergences starting from the same point. All right. So again, different divergences, different points. We're just measuring different candle size of divergences, right? Usually a good rule of thumb, I try to ignore smaller divergences. So I usually start at 5 and usually go to 40 here. As the time goes by, you'll see, for example, right here, this divergence now it's gone, right? And we should have bigger divergences now. Let's see. Oh, there it is. I not quite 100% sure. Oh, here it is. You remember this one that I told you from here to here? But if we had a bigger divergence or a bigger measurement, we should be seeing that. And look at that. We have it, right? So this is a great way to not lose a divergence, having this kind of indicators, right? But again, you'll get used to finding those divergences. All right, let's go for the price action and wrap this up. So we already know what a bullish divergence is. We already know what a bearish divergence is. And how do we trade on them? I already have give you a little bit of a setup, right? When you have your oscillator that plots divergences, remember, you can clean up by increasing the amount of minimum points for divergence. So this gets rid of anything below 5 candles apart divergences and measures all the way up to 40 divergences. For example, if you don't want all of these inner smaller divergences, we can go for example, I don't know, 30 points apart, or that would be too much, 25 to 40. Let's see how many of those disappear. Look at this one disappear, right? This one disappeared. Let's go for just 39 to 40 divergences, right? There you go. Now just big, huge, big AF divergences, right? So that's how you manipulate the size of divergence that you like. So you just make a window and then you get those divergences. There's a little bit of a caveat point in here. Let's go for 5 again. It is that smaller divergences, they tend to play small, and bigger divergences, they tend to play big. I usually leave it as is, so I have smaller divergences first, and then I can predict where is that divergence is going to break. Usually I use a predictive indicator such as predictive ranges, but also support and resistance play or react fantastic, phenomenal with divergences. Why? Because they give you a bouncing area where you could be expecting the next bigger divergence to play out, if that makes sense, right? Like, for example, let's analyze in, I don't know, either this one or this one. I haven't seen the results, so I'm just kind of like playing it by ear. But let's see if we have some. Oh, we're too bad. All right, perfect. Predictive ranges. All right. Let me see if I can have bigger predictive ranges. Yeah, much better. And why is it much better? Because I'm bouncing between the most important predictive ranges, golden lines. All right, so the price action goes up. So I'm looking for a bearish divergence, right? Goes down, perfect. By the way, remember, trend lines, always trend lines, right? That is the best possible scenario. This is your trend line. Trend line, it's broken, but where do I have my first divergence? Right here. Divergence right here. And where am I impacting into the golden? Hey, am I impacting in a resistance? Do I have a divergence? That is 1 plus 1 equals 2, right? Do I have anything else? Uh-oh, I do have a peak seeker. Not only that, maybe at the time, I don't know. Oh yeah, look at that. Just support and resistances. I have a resistance. The resistance, divergence, peak seeker, predictive range. Ding, 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 ding. Anything else? Anything else, right? So what do we go for? A retracement. What do we have at the time? Support, right? Where's our nearest and closest support? Right here. So you short from top to your first support. TP number 1, hit. Let's go. Move to stop to entry. Take your profits. Let's go and move to the next one, right? And then what happens? Oh, we bounce up. Ooh, another divergence in here, right? Where am I at? Resistance. Once again, 1, 2, 3. I don't know. Looking bad. Look at that. Another divergence. Hey, this is looking juicy. Should we be coming into? Yeah, sure. Why not? We have almost everything again, right? So short position where you have your setup. Of course, you set your stop loss, give yourself a wiggle room, and then you needed to wait 1, 2, 3, 4 candles. I know it's forever. 4 times 4 because we're, no, sorry. 4 times 1, that's 4 days you need to wait. That is like Alex Old Crypto would say, watching paint dry, right? But I mean, this is trading, guys. Sometimes when everything seems to be boring, boom shakalaka, that's why they get you, right? So you see that divergence, you see another divergence, you are in resistance, you have a predictive range, play your ads, right? At the end of it all, when you're in the markets, it's because you need to play your ads. If not, you're just gonna be watching from the outside and you will never trade, all right? Not financial advice, but there we go. Where do we take profits? TP number 1, move stop to entry, come back up once again at resistance. Do we have divergence? Yes, we do have divergence. We open up another short right there, right? And at this point, we know we're ranging. Come on, we already know that we're ranging. So what we do, we go for Wyckoff. So let's do it one more time. We have Wyckoff. Remember, I ignore everything from Wyckoff, but this one right here. And what do? I just invert this, all right? So if I don't like to invert it, well then you can use this one. But for me, it's easy. Come on, I don't ask too much to my brain. All right, I need to be honest. I'm lazy. I like math, but I'm still lazy, bro. So what can I tell you? What am I gonna be learning? A, B, C, 1, 2, 3. Come on, I'm so freaking lazy for that. Let's just learn the one that plays out the most, right? And then we just say unknown breakout so we can hedge it. Think smarter, not harder. All right, that's a new one. For me at least, all right? All right, so don't make me think harder. Just get me think smarter, all right? So there we go. We know we're ranging. So how can we measure the previous range? What was the previous low? What was the next ranging zone? We're looking for that. All right, that's fine. Right here, I move my stop to entry, and anything else, it's just luck. All right, perfect. Well, not luck. We already know, right? Perfect. Right here, we have a flip of the ribbon somewhere around here. So we open up a long position right here, or maybe on the next one. Maybe we got a little bit of FOMO, so we go in here. We measure our next week right down here. We go for maybe a little bit of a wiggle room right there. I would actually push it below the golden line to protect myself. And there we go. We are back up previous lows. TP number 1 because we are in resistance. Move our stop to entry. And right when we're about to say boom shakalaka, oof, we get a hit. All right. So what's going on in here? Rinse and repeat. Rinse and repeat. Let's remove everything right now. Rinse and repeat. What do? Go back to basics. Trend lines. Can I draw a trend line? High, high, high. Yes. Hello, high, high. Right. There we go. Can I do a channel? Yes, maybe I can do a channel. Right click, or how Alex showed, Control Shift. Oh yeah, there we go. Drew a channel. Yeah, kind of. All right, maybe I'm forcing it a little bit. So could be. Remember, we still don't know about this, right? We are right here, right? Because it went up, it took us out right there. That's it. That's all that we got, right? So we don't have this one. So we maybe are aiming for this top, this bottom, this low, right? Trying to get the average point. That's it. That's good. Where are we at? We are back off a golden line. What happened on the previous time that we hit that golden line? Perfect. Do I have a divergence? No, I don't. We have confirmation, long position. We wait 1, 2, 3. Come on, forever. And then boom, shaka laka. Once again, we nailed that trade. We're at the next previous resistance. Move your stop to entry. Take your gains 50% out. Rinse and repeat. Rinse and repeat. Rinse and repeat. Rinse and repeat. And the same thing that happened here happened right there. But the difference, remember, what am I looking for? Divergences. What happened right here? Divergence, right? Divergence. There we go. Just like magic. So guys, divergences are extremely, extremely powerful. All right. Tomorrow we're going to be looking into how to trade divergences more in depth, how to also trade divergences at the top, which is basically the same. Topping, higher swing failure pattern right here, right? Oh, come on, let me draw. Swing failure pattern. Do I have divergence? I do. Lower high, peak seeker. What happened here? Losing structure. Off we go. Breakout. Very nice. TP1, TP2, TP3, and now we're pushing it. Now we're pushing it because based on what happened here, we already should have been bouncing up. And what happens when everybody tries to short the damn thing? It gets you, right? And what happens right there? Another divergence. So where we're looking for entries, we're looking at the end of the divergence right here at the break of the structure. What is the structure? You throw your trend line. It's not about your breakout. It's about your retest. You have your divergence, peak seeker, reversal. Come on, the only thing that I'm missing is air to keep saying how many confluence we got, and boom shakalaka. Easy peasy lemon squeezy. All right, so I think that showcases the power of everything that we have learned, right? I know I've been going fast, right? But this is the way that I do it. Not that fast, right? But we know what's happening. We know what to look for. Guys, let me finish up this chapter with probably the most important advice that I can give you, all right? And that is know what are you expecting of, all right? So let's do one exercise so you know what I'm talking about, because this will give you, I would say, it's superpowers. Remember that when we talk about morphology, right? What is morphology? And I always tell you, this is another little trick that I disguise and push under the road. Remember, morphology, it is a fancy way to call or to say, well, we have one pattern that I know it could transform into another pattern. Let's imagine what other pattern it can transform into, right? For example, right here, morphology played out like a charm right here. Going up, bearish, a freak ton of divergences, right? On purple line, perfect retracement, breaking on your localized, because this was your localized trend line. We lost the inner structure, shorted. It's not about the breakout, it's about your retest, and right here should be a double top. But remember what I always tell you, morphology, guys, morphology. This could be a double top or a triple top disguised as a double top. So what other patterns could we be looking into? Well, then let's do it. We could be looking into a bull flag, a megaphone, right? A triple top, or just maybe a head and shoulders that is not quite developed just yet, right? So look at how I start disguising the look forward, project, imagine ahead, right? Right now, I want to end up revealing that every time that I told you morphology, think ahead. Every single time that I told you about the dynamic reactor or the SMA, projected, right? Forecasted, right? It had an intent for you to use your brain to think smarter, ahead of time. Imagine what could happen, right? And based on what could happen, you start looking for those little itty bitty things, and you know what to expect, right? For example, right here, we are ranging. What can I expect out of a range? Of course, I can expect a retracement, all right? Or I can expect a breakout to the next resistance, a retest, and up we go. I already know, right? Or maybe breakout, retest, and up we go. All right. Am I going to go crazy about this? No. What I need to do, as every time I tell you, we need to let the market decide, and we just take cautiously the known bouncing points. So what should I be doing right here? I know what I should be doing right here. Do you? So what's going to happen if this fails? Stopped out, that's fine. But when it goes up and then back down, I know what to do, right? So easy peasy lemon squeezy. So as always, guys, thank you so much for joining. Let's go to standalone. Thank you guys so much for joining. This is the last chapter, end of the show. Remember, I need your help if you guys want this show to continue. The way that you can do this is clicking the like button in this chapter, sharing this chapter so we have many likes, so we know that you guys like this and you want this to continue. And also please join the Discord, and when you are in the Discord, let me know what direction should trading with OC be taking. Should we be specializing? Should we be going into just trades setups and keep reminding and remembering everything that we learned? What should we be doing, guys? We are here to evolve with you, right? And to make profits with you, not just disappear, right? So that's the point. Evolve throughout here. Thanks, Tequila Time. Absolutely. Oh, that'll be fantastic. Drinking and drinking and trading. I guarantee that will be going great, right? Wink, wink. All right, guys. Drew, what's up, my friend? Thank you so much for joining. Hey, MJ, she's right here. Thank you. All right, guys. Really, my heart goes out to you, my friends. Thank you so much for taking this hour off your busy time. I know for some of you guys, this is like 4 in the morning, 3 in the morning. You don't know how much I appreciate you taking this hour to dedicate it to me. Thank you so much, and to dedicate it not to me, but to learn together. So thank you so much. And remember, we have 3 more episodes. Tomorrow, hidden divergences and trading with divergences. Then we're gonna be having difference between profitability and win rate, right? And finally, just the closure of the show. So get prepared. 3 more days, and we're gonna have a party in here, guys. Thank you so much for joining, and as always, see you guys tomorrow.